Well, hello, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar being brought to us by EventShares. Our topic today is on the 2020 Look Forward, What to Watch in Washington. Now, we're very pleased to have with us this afternoon Ben Phillips, the CFA and the Chief Investment Officer of EventShares. So please, everyone, join me in welcoming Ben. I'm going to go ahead and make you the presenter. So if you can share your screen, Ben, let's get underway here this afternoon. Thanks for joining us.
Great. Well, thanks for having me back, Cynthia. It's always great to talk and share our best ideas with everyone. So just to give you a little overview, I have top 5 government policy catalysts for 2020 as the topic today, but we're going to talk about a few that have worked in 2019, as well as look forward to 2020. It looks like Andreas says we're a little quiet. Andreas, am I too quiet or am I okay? Just want to do a quick check to make sure. Okay, well, I'm going to proceed and I'll look. Okay, great. Looks like we're in good shape. So just to give you a little overview, EventShares is founded by former Goldman Sachs executives and really looks at the intersection of government policy and markets. We realized there really wasn't a lot of strong research out there connecting government policy to markets, and we also manage some strategies related to government policy, U.S. investment strategies. The other title I have on there is Managing Director of Market Desk Research. This is a new initiative where people liked our policy research so much they asked us to expand it out beyond just policy research, and that's what Market Desk is. More broad market insights and stock ideas, sector ideas, thematic ideas, as well as just good information on the markets. So that's just a quick overview of who we are. So diving into the second slide, really our clients are primarily financial advisors, RAs, family offices, and institutions, although we do have a large number of individual or self-directed investors who follow us. And so feel free to check us out. There's a lot of media out there on us. And we also have great websites at eventshares.com and marketdeskresearch.com. And I just wanted to highlight too, Interactive Brokers has been a great partner, and we actually offer our research through their site. So if you go to free services, we're the only legislative and government research in the research and news category on Interactive Brokers website. So feel free to check that out there. So what we're going to talk about today, we're going to talk, just the first thing I think is important to separate politics from policy. And what we really help people do is look through that noisiness of politics and focus on where there's a clear long-term policy trend. So we're going to point out some that are currently occurring and some that we think are on the horizon. We're going to give a market outlook, just a quick overview. And again, midterms were 11 months ago, but it's interesting to look at what the market typically does after midterms and look at the historical context there. The third topic we're going to talk about, again, those policy catalysts, those long-term drivers of returns, which we really believe are uncorrelated sources of outperformance. And we're going to talk about the investment case, and then we're going to look forward to 2020 and what investors should be focusing on in our view. So the first thing, like I just mentioned, I think people have a hard time separating politics from policy. And, in my personal opinion, I think rarely do politics result in actual policy trend. It's a lot of the noise, it's a lot of the conflict, a lot of the debate, but where you actually see trends that impact companies, impact business fundamentals and industry fundamentals, that's policy. So policy is really the legislation and other regulation impacting companies' models. So that's really where we spend our efforts, is on those policy changes or legislative catalysts that really drive investment opportunities. And, I think we've heard a lot, people use the word political risk, and, I think we like to flip it on its head. I think people forget first that risk swings both ways. There's positive and negative risks, but also we like to think of policy as a leading indicator for changes to companies and changes to industries. So it's really looking at it as an opportunity and kind of changing the mindset around policy. And again, looking through the politics to actually look for policy trends. In our view, it's well telegraphed, it's long-term, and it's lower correlation with the market. So that's really why we think it's a very powerful tool to use in your investment analysis. So this is something we say U.S. policy impacts 100% of U.S. companies, and that's actually true. If you look at tax reform, every single company that does business in the U.S. or has operations in the U.S. was impacted in one way or another by policy change. And so really there is no company immune from these government policy changes. I think Washington is complex. A lot of people look at it and all they see is that political noise. We really try to connect the dots for you, looking for those winners and those losers in our research. Lots of opportunities. Congress passing 750 bills per year plus. Supreme Court on average 130 cases are ruled upon, and the federal agencies, this is the real meat of policymaking, are issuing 3,800 plus rules per year. And lastly, there is Harvard research that supports this, and I'd like you to encourage you to check that out. You can Google legislating stock prices down on the bottom there. And there's a National Bureau of Economic Research, nbur.org link that will take you to the entire paper. It's out there in public domain. But that was a really powerful study that indicated they generated 11% alpha per year for a 20-year period in a policy rotation strategy. So just looking at some of the different sources of policy disruption, and again, this is where a business model is impacted by a policy change. I think a lot of people think it's just congressional or just U.S. Congress that drafts a bill and passes legislation that results in policy change. That's one of the few sources that we look at, or a handful of sources. Judicial, we had the Supreme Court rule on sports betting in May 2018, I believe, and that ruling by the Supreme Court really opened up the path for states to legalize sports betting and gaming. So that's an example of Supreme Court ruling relatively recently. Federal agencies, again, I mentioned on the last slide that this is where the meat of real policy making occurs. I think people forget that when a bill passes, it's effectively just an outline that Congress has created for the agencies to actually draft the rules and regulation around that piece of legislation. So the federal agencies are really where lawmaking actually occurs in our view, and where the rules are written very clearly and defined. So you can think the CFPB, that's Consumer Financial Protection Bureau, writing the rules for lenders and retail lenders, EPA and FERC for environmental and energy regulations, CMS, that's the Center for Medicare and Medicaid Studies, that is the that is for healthcare healthcare legislation and regulation. And then states are powerful. We look at infrastructure as a really great example. I mentioned sports betting earlier, where the states are really enabling that, but infrastructure is a great example where states are really driving the bus there. So we definitely look at the large states. So just real quick, we'll touch on this. I mean, this is, again, it's looking at post midterms. So 11 months ago in November, the US had their midterm elections, but typically you see, a strong market in the first 6 months. That's this third one over. I'm sorry, this is the third year of the presidency. You see the strongest market the third year of a presidency. But then you see in the 6 months after, you typically see a market rally, which we actually saw after midterms, but then the market flatlines. So the market's actually behaving pretty similarly to what we've seen historically after midterm elections. When you get that initial bump from now we have some clarity on policy, but then really markets don't go anywhere, as I think investors start to look towards a potential second term of a president, or even a re-election or an election of another individual like a Democrat in this example. So just looking at the historical data, again, it's a relatively small sample size, so take it with a grain of salt, only 23 since the post-1935 period. But I think you hear people say that gridlock is good for markets. Well, we've seen that over the past 11 months. Gridlock has created some volatility and created a lot of noise. We have the impeachment hearings. We have, USMCA, that's NAFTA 2.0, not really getting done. There's a lot of things just kind of stuck in the in the pipeline, and it's not really driving stronger markets from a policy perspective. So this is particularly true during the second half of the president's terms, those last 2 years of a 4-year presidency. And I think what it all boils down to is this bottom chart. What really is going to matter is the macro, but it tends to be in a full control. So that means if Republicans control the White House, the Senate, and the House, or Democrats controlled all three, that usually drives the best market outcomes, versus gridlock tends to be a little bit of a drag on sentiment. And as we know, markets tend to be a sentiment indicator. So just diving right in, I think this is why everyone joined. So let's talk about some of these policy themes that were really driving 2019 market returns. So we're going to talk about defense spending, and maybe not recession proof, but it certainly has some different drivers, and we think it's recession resistant. I mentioned infrastructure spending, but we'll dig in a little bit more on that. It's really a state thesis. Cannabis legalization, I would say we're fairly cautious on that, lots of unanswered questions. And then sales tax compliance, really a headwind for e-commerce and a tailwind for some of the software providers that we'll call out. So just diving into US defense spending. If we look at defense spending, so the blue bar is defense spending versus this defense spending growth. So you can think of defense spending industries, revenue, if you want to think of it like that, growth, versus the S&P sales growth. And that's the gray bar is the S&P sales growth. So we look at it throughout the past, almost 20 years, and you see that defense really does have its own drivers. And the early 2000s, it was driven by Bush defense spending, and then in 2008 through 16, really Obama drawing down some of that defense budget. And shrinking some of the U.S. Influence in the Middle East, that caused weaker defense spending and smaller budgets there. So you can see it does have a lower correlation, and that's where we think it's valuable from a policy perspective, and that it adds diversity to a portfolio. So 2018 was a volatile year for defense. We saw Secretary Mattis resigning just about a year ago. We saw Trump talking about a Syria withdrawal around the same time, which we think that was part of the reason for Mattis's resignation. And then we heard about potential budget cuts of 5% before President Trump reversed course there in January. In 2019, we've seen growth really resuming. Defense has been a strong performer in the portfolio, or I'm sorry, in our strategies. And I think defense is still fairly well positioned, although we'll see, I think 2020 might have some more volatility around defense. But again, we view it as a diversifier in a policy portfolio. So infrastructure, I did mention, it's really a state thesis. And what states are doing is they're passing increases in fuel taxes, and I should update this. It's actually 30 states now have passed fuel tax increases since 2013. So just over the past 6 years, we've seen 3/5 of the states, 60% of the states in the United States pass fuel tax hikes, which the use of proceeds is largely to go for infrastructure, transportation infrastructure spending. And we're seeing management teams, they've been talking about this since the beginning of the year, but we're now actually starting to see it show up in earnings. And we're expecting to see that continue in Q3 and Q4 earnings that will be reported here in the coming weeks and months. You can always check out our infrastructure policy playbook if you want an idea of investable names. That's at EventShares.com. And there's also the link you can click there in the slide deck. So cannabis, I mentioned, plenty of unanswered questions. I would say we're very cautious on the space. We're seeing a lot of hype. We're seeing a lot of hype in the public valuations. We're seeing a lot of excessive valuations in the private deals that were shown. But really, I think the core thesis boils down to when cannabis goes legal on the recreational level. So right here, we're seeing medical. When it goes legal on the recreational level, we see the price drop materially, the far right of that chart there, talking about going from almost $3,000 per pound on a wholesale price basis down to in the $600 range. So it's really dramatic. The price declines once the kind of, I guess, gates are cleared or floodgates are opened, and now you have a lot of new entrants, very low barriers to entry, and it's a cash crop that takes 3 to 4 months from planting to harvesting and in full production. So it's a very easy crop to grow, very low barriers to entry, and valuations are extremely high in our view, hence why we're very cautious on this. From the policy perspective, we don't see federal legalization coming in anytime soon because there's multiple steps that we think need to occur before it gets there. We did see the Safe Banking Act, which is for states to be able to bank, states who have legalized cannabis to be able to bank in federally chartered banks, which is a big step forward, but that's one of the many hurdles. So we're watching that closely. But right now, we think valuations are extremely stretched in marijuana. A way we are playing it is through tobacco. So just worth looking into that a little bit, a backdoor way into cannabis tobacco. Who's better at growing a cash crop, marketing and distributing it than companies that have been doing it for well over a century? And then sales tax compliance, the last big one, and it's really just to call out that there are instances where a single stock can be dramatically impacted by a policy change. So what happened here is we had the Wayfair ruling from the Supreme Court, which was Wayfair.com, if you know that retailer, online retailer. But what the outcome was is the Supreme Court effectively said that states have to collect sales tax in the state where they're transacting or where they're doing business. And this was a big change. If anyone is a U.S. citizen and recalls that in the earlier years, maybe 10 plus years ago, when you were ordering something from Amazon, you would see there was zero sales tax collected typically because they would ship it from an out-of-state facility and they would not collect sales tax. And it was effectively a tax dodge that they got away with for a number of years, along with a lot of other e-commerce companies. Well, that finally bubbled up to the Supreme Court, and the Supreme Court said, no, you have to collect sales taxes in the state, regardless of your physical presence. And so that was a big change. Now, who was there? AVLR saw this coming. AVLR is their ticker. They saw this coming and had a software ready to really help this patchwork of tax rules at the state level and help e-commerce companies immediately comply with this effective law that was created by the Supreme Court ruling. So that's why you see the stock has really been on a tear since its IPO in August 2018, and I think it IPO'd around $24 a share. So kind of first day really pops nicely, and then it's kind of continued its march upward. So we're still fairly constructive on this one. So looking at the 5 policy themes for 2020, which we believe are going to be large drivers of 2020 subsector and sector performance. These are some of the ones that are on our watch list that we're constantly monitoring, just to look at the 1 week and quarter to date. And this just shows you a quick highlight of some of our research. We look at a near-term overbought versus oversold, and this is based on a 50-day moving average. You can think of the dark red as 2 standard deviations above that, and the dark green as 2 standard deviations below. So these are baskets of U.S. stocks populating each one of these that are driving this 1 week and quarter to date return. So touching on just the 5 policy themes that we think are going to be large drivers for 2020 returns, sports betting I already mentioned, and it's really started to get some legs recently, but we do expect that to be a multi-year trend, and I'll touch on why. IMO 2020, this is the International Maritime 2020 Low Sulfur Fuel Standards that go into effect January 1st, 2020. This is a near-term catalyst that has really, I think, been under-anticipated by the industry, and all of a sudden is catching fire in the past few weeks here. Renewable fuels, that's one where we see ethanol continue to be produced year-round, as well as the Trump administration pushing for higher blending requirements, which is really driving higher ethanol production. The reason being, in our view, we think is to appease corn farmers in the Midwest of the United States. And then media deregulation is really the FCC looking at market consolidation and freeing up potentially more capacity for local broadcasters to consolidate more and drive better pricing power or better negotiating leverage with the broadcasters and demand higher retransmission fees ultimately. 5G telecom. This is a multi-year build-out that is just beginning in 2020, really supported by the FCC and the White House. So we'll get into that a little more too. So looking at sports betting is an interesting one where I mentioned the Supreme Court decision a few times, but really the view is not necessarily it's going to drive a huge amount of earnings growth at the gaming companies or in the technology companies. Well, maybe more so the technology companies, but not the gaming companies. But the view is it's going to drive a newer customer segment, bring in a younger customer base, increase foot traffic into the gaming facilities. And that's really the thesis. So if you look at like MGM, for example, I believe their sports book is 30 million EBITDA of their 2 billion. So that's 30 million of their 2 billion kind of cash flow. It's not a massive earnings driver, and I think they have the biggest sports book in the world. But what it is the sports betting allows more facilities to attract that younger clientele who, let's say, maybe comes in, places a bet, has a burger and a drink, and then goes and plays, a table game like blackjack or craps or another table game. So that really is the thesis on sports betting, a multi-year trend. We think we're still in the beginning of this trend and have many years left where you're going to see states continue to legalize sports betting. And we already saw it in 2018 and 19, but we think that's continuing. The International Maritime Organization is a global entity that is really, I think, G20 plus nations who have agreed upon lowering or burning cleaner fuel in maritime shipping. So over the seas, it's the last place you can really burn this dirty high sulfur fuel. The IMO 2020 regulations are saying you have to comply with certain output requirements as far as the exhaust from your ships, or you have to burn a lower sulfur fuel. So that's a big change. We're seeing the sulfur content go from 3.5% to 0.5%. That's 3.5 to 0.5. That's a big change. And all of a sudden, you're going to have this this overseas diesel that is competing with over-the-road diesel and jet fuel. So it's really disruptive to the industry. Who's going to benefit in our view? It's the tanker stocks and especially the shorter range, not the super tankers, but the long range and the smaller tankers who are moving semi-refined and refined product. Think like Scorpio tankers, for example. Think Diamond Shipping, DSSI, and then another one that's interesting. There's like World Fuel Services, ticker INT. World Fuel Services is fuel logistics. So those are just some names that are really exposed to this, and you can check out those the recent price performance there. And it's also, we're really exiting cyclical lows, so this is a real catalyst to bring this industry off of a down cycle, and it's a secular trend here, this shift. So really setting up nicely because of a policy change. Renewable fuels, this is already starting to see it. We saw it start in August where the EPA finalized the rule. Again, it's a rule by an agency, worth pointing that out. Finalized a rule that allowed year-round sales of E15, which is increasing ethanol demand. We also saw legislation to reinstate the ethanol tax credit, which is driving a cash boost to these companies. And then we also saw Trump really with the refiners kind of getting caught up in this blending requirements. And the ultimate outcome we think is higher ethanol production and higher blending requirements despite all the noise there. I threw uranium on there on the bottom left, but this is just, maybe not renewable, but a cleaner fuel. The Section 232 study, that's a national defense study, has cleared the way for uranium to exit a cyclical recovery in our view, and then really see secular growth over the next couple of decades as China and India continue to build out nuclear reactors for energy, for electricity. That's 50 new reactors globally in China and India on the slate over the next decade plus. And then media deregulation. This is one that caught some attention and then recently has really been fading since mid-year. We think it's a really interesting opportunity to get involved at some of the local broadcasters. Reason being, the FCC is reviewing the local market ownership rules and saying that you no longer have to be so constrained in how many broadcasters you can own. They used to cap it on the percentage market share, an ABC and NBC, a Fox could own in a local market. That is being relaxed, or we expect it to be relaxed, and that's the current anticipation from the policy trend that's going to drive more consolidation in the industry is our view, and give them better bargaining power with the broadcasters to ultimately drive higher retransmission fees, which means higher revenue. So you're going to see fewer competitors, we think, as they consolidate, who are negotiating harder, driving higher revenue, higher earnings growth for the industry. And then 5G telecom. This one is, I think most people have heard a lot about. This is the 5th generation of wireless communication that is being deployed globally. The way we like to express it in a portfolio or in a strategy is really looking at the Western equipment providers and the servicers. So just some names on there, some names and their tickers on the bottom left. You can see those are some of our favorite ways to play 5G. You can see the tower companies on there, and then a lot of the equipment like Ericsson, SBA, Nokia, Ciena, Unity, and even Boingo is kind of more on the service side, but definitely some interesting ways to play that. Our general view is we want to avoid companies with high exposure to China, given that we're really cautious on the China trade, despite really the hype in early October on a deal potentially happening. We are pretty skeptical on that occurring, and even if it is, it has very little teeth, and we don't see kind of the phase 2 going. So we think this is really an ongoing dispute and escalation with China as the expectation is, and our concern is it's going to impact the semiconductor stocks like Skyworks and NXPI, and even Broadcom, who have exposure, really great exposure to 5G directly or indirectly, but have a lot of high China revenue. So that's our biggest concern with those types of stocks, and why we don't think they're the best way to express the view right now. This is just a look at our policy tracker. So the EventShares policy tracker, it's really a watch list of different areas of the market. You can think of subsectors and even below that, narrow industry groups that are impacted favorably or unfavorably by policy. If you see a plus by it, the view is it's a positive policy trend. A minus is a negative policy trend. If you see a plus and a minus, that's more mixed or nuanced. And feel free to reach out to us, and we can help walk through any of the more mixed or nuanced views, especially on the bottom right there. You'll see a number, especially around trade. This is all downloadable at eventshares.com, by the way. And there's a lot more that goes behind it. This is effectively the cover page, and we dive into each one of these policy themes on the following pages. So just reviewing, defense spending, recession resistant, infrastructure, a state thesis, cannabis, it's going to be a long time in our view before federal approval, and we think valuations are really excessive there, and not a great place to be investing capital right now. Sales tax compliance, we called out AVLR as a continued tailwind expectation there. Sports betting, it's really a casino traffic play in the gaming technology. as well that's enabling sports betting. IMO 2020, that's the low sulfur fuel regulations. We think it's very disruptive, and all of a sudden the market's finally waking up to it. Renewable fuels, ethanol again being produced year round, as well as the refiner blending requirements are really driving demand for ethanol increases, especially next year is the expectation. Media deregulation, we think the play is local TV stations, and then uranium, Section 232 study restarts the cycle in our view. And then healthcare I threw on there as a bonus. I think our view is the managed care is facing a very low probability of a single payer or a Medicare for all. That's driving a really negative sentiment in healthcare right now. And just to give you some stats, healthcare is trading at 2 standard deviations below its 5-year average EV to EBITDA multiple or its cash flow multiples. So we think healthcare is worth taking a look at from overly negative sentiment from the policy fear perspective. Sometimes that creates opportunities, value opportunities. Healthcare is also really underowned if you look at it as the ownership as a percentage of typical ownership versus the S&P. Healthcare is actually a fairly underowned sector right now, which I think is indicative of that multiple that it trades at as a sector. So just real quick before I open up to questions, I mentioned Market Desk at the beginning, but marketdeskresearch.com is the new premium research business looking at broad market trends and themes. And so it's worth checking out. And these are really the 6 initial reports. There's, a top 10 ETFs looking monthly at really interesting ETFs. There's a weekly note that is everything you need in one place. There's a daily pre-market more for the traders or active, market participants. A thematic investing monthly. IMO 2020 and sports betting were both covered recently. Ethanol will be covered this week. Then there's idea screens looking at 44 different screens of single stocks, and then a mid-month update, which is a macro update, asset allocation, and asset class outlook. So just to look at kind of the top 10 ETFs from last month, these are some of the ones. IHF, the healthcare ETF, screened up top as a long-term. I just mentioned kind of reasons why. You'll see XOP, energy is also very under-owned, so that's interesting too. So lots of interesting ideas on here for you to dig more into, and there's a one-pager behind that on each. For example, this is just half of the page on IHF. And then looking at the 45, I think I said 44 earlier, but 45 different idea screens, very different look. And this is last month, so it's a little dated. Feel free to email me. I can send you this week's updated one. But yes, 44 or 45 different screens, depending on the style of investing you like. There's a look at the next 12 months EPS screen, just to give you a flavor for what the one pager on each one of the screens looks like. And just quick pricing on if you were to subscribe, what it looks like. $99 a month for the professional, which is what we see most people subscribing to. The starter is really more for those traders at $39 per month. So if you have any questions, feel free to email us at info@eventshares.com if there's anything that I didn't answer today. But I think, Cynthia, I think we're going to open it up to questions.
Okay, well, thank you very much, Ben. And what I would like to remind everyone, if you do have a question, there is a questions panel that's included in the control panel on the right-hand side of your screen. Simply double-click that title bar, and then you can type in any questions that you might have for Ben before we do part company here today. Now, also, while we are waiting for questions, I'm going to grab the controls back from you for just a minute, Ben, and show everyone where you can access this information on the Interactive Brokers website. Now, notice I've just moved over to our website and do want to show you that underneath the pricing menu, you can find some additional information on EventShares by going into the Research and News page. You'll see at the top of this page, we do include several different providers, and as Ben was showing you, it's included in this screenshots with today's notes, are the free services. If I simply click on that button, you'll also see legislative and government and go into this link here that will bring us directly to the EventShares listing. Now notice here, there's it is available to IB clients at no additional charge, and is also available on our new or on Trader Workstation, as well as for our 2 different type of accounts. We have an IBKR Pro account and IBKR Lite. So it is available depending on which account structure you've opened up. But I also do want to go in and show you that you can learn more, you can view a sample report, or even go out to the EventShares website with the links that are included on this page. Now also, since this is available on your Interactive Broker platform, let me come down and I'm going to pull up our Trader Workstation and show you that whether you work in the Mosaic pre-formatted workspace or the classic version of Trader Workstation, you can access the EventShares information underneath the new window drop-down button. Notice here we'll go into Analyst Research and you'll see those items that you have subscribed to are included here, especially the EventShares research. So I did want to show you that it's available. Now you can access this from the Mosaic interface, but also let's go over into the classic version of Trader Workstation, where underneath the analytical tools, you'll also find, let me see here, Analyst Research, and that same listing for EventShares is available here as well. So did want to show you that you've got access to the information that Ben's been talking about, and if you do want some additional features, simply go out to the website where you can access the EventShares website as well. Notice here the different monthly reports, the weekly reports that are available. Simply double-clicking on these will bring you into that report where you can see the information as of the date that you've selected. So with that, did want to show you that you can access the information. Now, I'm not seeing any questions come in. Have you seen those, Ben?
No, I haven't, but feel free to lob them in. I'm happy to cover any of the topics we touched on.
Okay, well, excellent. And while I'm waiting for that question, also do want to point out, and let's go back to the Interactive Broker website. I'm going to go into our, let me see here, I do happen to have that policy listing. Well, let's go, let me see. What I do want to let you know, here we have it. I'm going to bring this over and did want to take us back to the Interactive Broker website because I do want to remind you that we have been recording today's information. I will be sending out follow-up emails that include a link to today's recorded playback if you do want to come back and revisit the concepts that Ben went through with us here this afternoon. You'll also find, we'll list this under the education menu. Notice here there's the webinar section where you can find any of our upcoming webinars, but also go in and review any of our prior webinars. So once I do come into this link, I did want to show you this is where today's session will also be posted. Later on this afternoon. So do watch your inbox if you want a copy of the slides that Ben has provided. And if you want to come back and review any of the concepts discussed today, this will be updated later on this afternoon, or before I even get it to the website, you'll find this will be listed in your inbox. So do take a look for that. So with that, thank you everyone for your participation with us here this afternoon, and a great deal of thanks to Ben Phillips of EventShares for bringing us this information and making it available to Interactive Broker clients. So with that, we will conclude our session today. Thanks everyone for your participation, and have a great rest of your day, everyone. Thanks so much. You can all exit using the X in the upper right-hand corner of your screen.